Good morning, everyone. It is March the 3rd, 2016, and time to kick off another trading day. The overnight news around the globe was mixed. Generally speaking, the economy in Europe was a little bit stronger than anticipated. Numbers came in a little bit better based on Germany's strength. Mixed for the other countries. Not much news out of Asia. Only the Hong Kong market was down. The other markets just kind of holding their own, probably awaiting tomorrow's non-farm payroll numbers from the United States. That would be my guess. And today we have news that can impact the trading, but we have tomorrow's non-farm payroll number. And they're looking for 190. They were looking for 185 on the ADP number, and it came in at 214. So tomorrow's non-farm payroll number, the earnings, and the average work week will all be under scrutiny, and if all of those come in higher than forecasts, then the Fed can raise interest rates on March the 16th that they said they would do, or telegraphed they could do, on their December announcement. So tomorrow's numbers will be pretty important. Probably tomorrow is the second biggest news day of the month, with everybody waiting with bated breath to see what happens in on the March 16th meeting, the FOMC announcement then. That said, today we have news, jobless claims, the default number 270. Productivity minus 3.2. Unit labor cost plus 4.7. PMI services 53.2. I don't have a strong feeling, the numbers generally speaking have been lower than forecast, but this week we've got a bunch of numbers that have come in higher than forecast, so your guess is as good as mine. Based on the trend, these numbers should come in lower than forecast, but and then factory orders plus 2%. So all of these numbers would be, if they came in as forecast, would be supportive for equities, which would hurt treasuries. Natural gas inventories. We're in the swing part of the year now, minus 50 BCF. And I don't think anybody will pay any attention for that, including energy traders. It's just not where we're not going to increase demand significantly. So here we sit. You can see volume is moving lower in each of these distributions. That tends to favor the short side. We're definitely dealing with a B. We're at 9.5, and resistance starts at 12 to 16. So first sell is going to be 12 to 16. Second sell is going to be 19 to 23. On the buy side, because we are pointed lower, I think we can trade it lower. The numbers, so we're going to put 29 to 1 for buy 1 with a question mark at 5. Again, it's just going to be down to the news. And then 21 to 25. Like the short side first, based on structure, based on the forecast news. Okay, looking at the 30-year, the spread held in last night. We're definitely dealing with a B, and probably the lowest volume area is right up here in the 63.16, 63.20 area. We do have 63.11, and resistance really starts at 6. So here we are at 24. So might get a little higher here. Might be on the cute side too. 31 to 31.03, sell 1, and then 11 to 15, sell 2, and I'll put a question mark at 27. On the buy side, volume has been moving up on these three distributions as knob spread players have gone from the short side to the long side. So that is being rebuilt right now. So 13 to 17 by 1. Basically the bottom of value. And then 1 to 5 where we were yesterday for buy 2. Everything kind of held in last night. Not a lot of change, not a lot of movement one way or the other. So markets, my guess is we're on hold awaiting tomorrow's non-farm payroll numbers. I still like gold. We were hoping to buy the 35-37 area last night. Overnight session low is 38. Obviously other people had the same idea we did. Okay, the numbers could come in a little bit. The economic numbers, the news if as forecast is good for equities, not so good for gold and treasury. So that's our dilemma right now. Pretty comfortable selling against 50 just because it's a round number, but 47 or better, we'll put a question mark there. So sell 1's 49 to 50, and then 54, 56 for sell 2. On the buy side, 41 to 39 buy 1, and then we'll make it 36, 34 for buy 2. And down to this morning's news and the E-minis reaction to it. Looking at the euro, which is a great contract, especially if you can trade it on London time, if your clock is there. Had a P yesterday in a reasonable close. 109 was the number that we were hoping to sell in the overnight. Did not get it there. If we fold the overnight into yesterday's distribution, definitely have a P. Volume is above time, and volume moved up on the London split, and right now we've got a new move that has started up in the S period. So that's the correct split, and you can see the volume is moving higher in these distributions, which takes us to we got this low at 15, and we have the last rotate up at 29. So 15 to 25 is going to be sell 1, and 45, 55 sell 2. On the buy side, this move started out of the 80 area. So 75 to 80 buy 1, and then 50 give or take for buy 2. Longer term, I'm more comfortable with the short side of the market, but we'll have to see where this news takes us this morning and readjust after that. Okay, crude is really holding in well. Big news in energy yesterday was the CEO of Chesapeake, who had been indicted for rigging bids for leases with another company that name was not mentioned, was killed in an automobile accident. And that's pretty big pill to swallow for those that were close to him, around him, on both counts. But it's you know, we never know how long we're going to be here, and you got to make every day count. No wasted time. Okay, here we are looking at crude oil, and if we put all of this together, we have a P, and there's your move out of the middle, and you put that together, we're dealing with a very, very strong P. So again, the play is 35, whether we can get through it or not. So 35, 35 and a quarter, sell one. Then we'll make 35, 75, 36, sell two. So you're just leaning against resistance, and if it comes out, it comes out. The 34, 34 and a quarter, buy one. And then 33 and a quarter, 33.50, buy two. But crude's holding in actually pretty well with all the stuff that's going around. And again, when I just have got since 1984, when I got involved in futures, when a market just won't go any lower, and you know what the production costs are, and that's 30 to 40 bucks a barrel right now in the United States. It's below 20 in Saudi Arabia, but then you have to add transportation and the rest to it. So what happens is you just don't get a very aggressive seller. You'll have day traders push the market around, but you won't have people come in and take huge size. There's still stories out there, crude's going to 15 to 20. The big unknown right now is how long does it take to work off inventory? And that will hang over the market. So my guess is we've known that the low could come between December of 2015 and June of 2016. That was our window. We're in it. And I don't see anything that has changed that original assessment. The question is, how long will prices stay at these levels? And until they start to see drawdowns in inventory, we'll probably, wherever the trading range is established, looks like right now maybe it's $30 minus 35 bucks plus. We'll just kind of trade in that range and be wonderful swing trade opportunities, but probably not going to see a $10,000 move in a couple of 3 days in the contract. So can't get through 35, we definitely want to be short. And last but not least, the contract the world wants to learn how to trade. And it is the toughest contract to trade because of all the games that are played. And there's another thing that people don't consider. Price discovery starts at the New York Stock Exchange in the cash market. Normally, price discovery is in the futures contract for whatever the futures the underlying instrument is, or whatever the commodity is, and that makes it different. Now, futures players will fade the New York Stock Exchange information until they can no longer ignore it, and that's when we get these great big fast quick runs. So watching the advanced decline, watching the trend, watching the tick, all of that, you know, out of the corner of your eye can really help your trading. So structurally, just looking at the market right here, go back, we'll take a look at this screen to add some perspective. You can see there's a pretty clean break in the market in this 85 area. It's just right across here. There's a lot of tops and bottoms that come in at 85 plus or minus, and we're there. And we have to take it out. If we get through that area, then obviously 2,000 around number is the next stop. So 85 I think is a pretty important number. When we go look at our F1 screen, you can see we have this high right here at 89. That's 2012, 2013, so 2010. So if we get through the 85 area, 95, 92, 95, 2000 is a round number, then 2010, 2015 is for structure. Tells us the market can go. Nancy, I would hope not. That that people will suppose this and suppose that, and they'll look at it and they'll say, yeah, maybe he did take his own life. I mean, times are tough in the oil patch. There's no doubt about that. But I just I don't see how anybody has the courage to do that to themselves, but some people do. Hope not. Okay, so the E-mini, here we are, and resistance is at 85.88. So our sell is 84.89. Then we'll make it 94.99. And we have news. Jobless claims 270. Productivity minus 3.2. Unit labor cost plus 4.7. PMI services 53.2. Essentially the same thing as ISM. ISM services 53.1. Factory orders plus 2%. And natural gas inventory minus 50. The focus will be ISM service and factory orders right here, and they come at 10 Eastern, so we're going to have to wait for that. On the buy side, 75 to 80, and you can see the rally started up here in M period. It's set, so that's our buy zone, buy 1, and then back to our 65 to 70 for buy 2. And down to the AM news. Okay, it's going to take a bit to get everything up and posted. We had a lot to cover this morning, a lot to consider. We'll get busy on that and be back with you as soon as possible.